Good morning. I'm Brian Curtis. Here are the stories we're following today. U.S. President Joe Biden has written a letter to congressional leaders explaining the military strikes on Iraq. Ed Baxter has that story and more from the 960 newsroom in San Francisco. Ed?
Yeah, exactly right, Brian. The theme is that they're meant to deter further Iran proxy forces from attacking to degrade and disrupt efforts against U.S. military installations. And the U.S. says it has now shot down 10 more drones and 5 missiles launched by Iran-backed Houthis. Now, Bloomberg's Jonathan Tameri says the Biden administration is walking a very fine line here.
There are reports from our colleagues at Bloomberg that the U.S. is even considering military strikes against the Houthis, but that is something that is a step they would not take lightly, again, with the fear that you don't know where these things will spiral in the Middle East, and they don't want to draw in, the U.S. doesn't want to be drawn into a conflict there, and they don't want to be their allies to be drawn into a wider conflict.
And ABC military analyst Mick Mulroy says they'll also be carrying out sea attacks if necessary.
Basically, offshore military assets that can deliver fire onto targets to assist them. So that is one of the reasons why the United States did this. They obviously don't want it to happen, but they're trying to deter it from happening.
Now, 2 major shipping companies say they will limit shipping in the Red Sea. We'll have more on that in just a few minutes here. Meanwhile, in Israel, its military chief says the war against Hamas will last for many more months, and retired U.S. Navy Admiral James Stavridis says that the White House is giving more stern warnings to prevent a prolonged conflict.
There's a host of long-term costs that's going to be associated unless the Israelis start to dial it back.
Stavridis also saying that something needs to be done very quickly to get aid into Gaza. The Biden administration has announced its final package of the year for Ukraine. It's a $250 million package, weapons and equipment. Secretary of State Antony Blinken says the aid is imperative for Ukraine to fight against Russian aggression, but that it is imperative now that Congress act when it gets back. Donald Trump has won another round in the legal fight to keep him off the Republican primary ballot in Michigan next year after the state Supreme Court left intact a lower court ruling that rejected efforts to bar him over his role in the January 6th attack on the Capitol. Michigan Secretary of State Jocelyn Benson says she had to step aside for the ruling.
This isn't over, but the question of who should decide squarely still remains in the courts, not with election administrators like myself.
It may still make it to the Supreme Court. Meanwhile, prosecutors in Trump's election interference case are asking a judge to rein in Trump's rhetoric. Bloomberg's Nancy Lyons has details.
Federal prosecutors working for special counsel Jack Smith are asking a judge to keep Donald Trump and his attorneys from claiming to jurors that the case was brought against him as a partisan attack by the Biden administration. In the motion, the prosecutors say Trump is trying to inject, quote, irrelevant and prejudicial issues into the case. The motion was filed 2 weeks after Judge Tanya Chutkan froze the case while an appeals court considers Trump's claim that he is immune from prosecution. In Washington, Nancy Lyons, Bloomberg Radio.
Thank you, Nancy. Global News, 24 hours a day and whenever you want it with Bloomberg News Now in San Francisco. I'm Ed Baxter, and this is Bloomberg. All right, Brian.
All right, Ed, thank you very much. Time now for the top business stories of the hour. Well, as mentioned earlier, Apple has won a court ruling pausing a U.S. sales ban on its newest smartwatches. The ruling buys the company some time in an ongoing patent dispute with medical device maker Massimo. And as Bloomberg's Mark Gurman predicted earlier, the watches are already back on the store shelves.
Getting this reprieve via this emergency order through an appellate court in D.C., that definitely puts the watch on track to probably go back on sale today. Through January 10th at minimum. January 10th is when the ITC is going to respond and try to shoot down this motion. But this particular court in D.C. has a history of not granting these emergency lifts if they don't believe that this will stick long term.
That's Bloomberg's Mark Gurman. Mark will join us later in this hour. And the ITC that he referred to there, the U.S. International Trade Commission, blocked the import and sale of 2 Apple Watch models earlier this month, citing patent infringement. And Apple stock traded essentially sideways today. Well, the New York Times is suing Microsoft and OpenAI. We get the story from Bloomberg's Karen Moscow.
In a lawsuit filed today, the New York Times claims that technology firms relied on millions of copyrighted articles to train chatbots like ChatGPT and other AI features, allegedly causing billions of dollars in statutory and actual damages. The Times did not specify its monetary demands. Representatives from Microsoft and OpenAI did not immediately respond to requests for comment. The suit is a sign of the increasingly fraught relationship between the media and a technology that could upend the news industry. Karen Moscow, Bloomberg Radio.
Shipping giant Maersk is preparing to resume sailing through the Red Sea. The move is thanks to a new multinational maritime task force to protect vessels from attacks by Houthi rebels from Yemen. And as Bloomberg's Brendan Murray notes, at the moment, the decision by Maersk is the exception, not the rule.
It seems that they're going to take the ships crossing through the Suez Canal on a case-by-case basis and on the basis of reducing the risk of these attacks. So if they can get assurances that they're going to have the protection from the navies that are allied to protect maritime shipping, then it sounds like they'll do that.
That's Bloomberg's Brendan Murray reporting. Maersk is the world's second largest container line. In the meantime, shipping giant Hapag-Lloyd said that it would keep its vessels away from the Red Sea. The container liner said it would continue to reroute its vessels via the Cape of Good Hope. That's a detour of several thousand miles. It follows a spate of attacks on merchant ships on a route that handles about 12% of global trade. Goldman Sachs and Morgan Stanley expect the slump in China's housing construction to get worse in 2024. We get the story from Bloomberg's Bonnie Au in Hong Kong.
Consensus from 10 investment banks and brokerages says the housing slump will worsen next year. Goldman economists have one of the most bearish forecasts. They expect a double-digit contraction in real estate fixed asset investment next year. Morgan Stanley sees the gauge dropping 7%, while UBS expects a 5% decline. If they're right, that leaves China on track to post 3 straight years of contraction in property construction. In Hong Kong, I'm Bonnie Au, Bloomberg Radio.
This is Bloomberg Daybreak Asia. Let's say good morning Asia time to Ben Emmon, Senior Portfolio Manager and Head of Fixed Income at New Edge Wealth. Ben, great to have you with us, especially during this holiday season. A lot seems to have been discounted now in markets over the past couple of months. No need to mention all of them, but the Fed's at the center. The soft landing is there too, and seasonal conditions and all of that. So it seems like we would need some new catalysts in the new year if we're expecting risk assets to perform well. What might they be?
Hey, Brian, happy holidays. I think that it's going to be about the economy first and foremost. You know, I've noted that some of the data coming through, let's say manufacturing data or services, there's some uptick there, or at least some improvement from the last weeks in, say, November and December. And so I think that if the economy shows some acceleration in January, then that would be the catalyst for the risk asset rally to continue. Otherwise, it will be back towards trying to focus on the big event next year, which is the presidential election, and any uncertainty that comes along with that, right? So I think first and foremost, the economy, Brian, and it does look like we're having a little bit of a improvement of momentum there again.
So your corner of the sandbox, obviously, is fixed income. Can we see bonds and stocks rally together now for a while, or for how long?
Yeah, that seems to be that we're back to that idea, right? The wedge of the rising S&P and falling bond yields, and of course, this is all driven by the inflation picture that continues to improve. The latest number of the core PCE deflator was very encouraging. In fact, actually, as you may have read, I thought there was somewhat level of deflation start to show up there in that index. This helps obviously bond yields to go down, and that in turn drives up stock price, at least that has an influence. I think that is to an extent, you could see that continue. But as I mentioned, like if the economy shows again this resilience, this sort of acceleration of and strength that we've seen before, I do think there will be a bit of a fork in the road for bond yields. So let's see what happens here. We do have a lot of new supply coming in the new year for treasuries. That still will be something that the treasury market has to confront next year in terms of lots of supply and potentially strong economy.
We had strong demand for some $58 billion of 5-year notes. And as mentioned, that sent bond yields slumping. And earlier yesterday, I guess it was, we had some solid 2-year auctions that drew buyers in. What do you attribute that to?
Yeah, I think this is about the year-end rally in both stocks and bonds. So it must be that there's still a fair bit of funds or other investors that were underweight in their duration in their portfolio or underweight treasuries. I think that's part of that you're getting that short covering, as they say. On the other hand, obviously, as I mentioned, the inflation data is very encouraging for bond yields, and it does show up in the pricing of rate cuts. Right, we're now about 175 basis points of cuts priced by March of 2025. So I think that does fuel a bit of the demand coming into these treasury auctions. As I said, it could change again when the new refunding is announced in January, and it may be more supply again. So it may be just a temporarily, reprieve here at these auctions at the moment.
So if we continue to see bonds do well, you think it's more due to inflation coming down and not concerns about stumbling growth ahead? And if that is your core belief, expand on it a little bit.
Yeah, I think, Brian, that the inflation picture has dramatically shifted. For some time I was too in that camp of that inflation was sticky and the Fed had no choice but not only stay higher for longer, but potentially had to raise a bit further. But that turned out to be not entirely right because, the pandemic effect on inflation is really easing off. And I think as I mentioned, the PCE deflator that came out last Friday, drill in that basket, there's about 15% of the index is now in a more consistent deflation, meaning prices are down more than 1% for the last 6 months. And so that becomes I think, a different story for the bond market next year. If that continues, that deflationary trend, and we're getting even more deflationary pressure in the CPI and PCE indices, then I cannot see the 30-year yield staying where it is now. It will be a lot lower, right? We want to price in more rate cuts. So I think that's potentially the story.
I saw your piece yesterday about the PBOC providing a lot of excess liquidity into the markets, liquidity that is not finding its way into the Chinese equity market. Is it finding its way into U.S. assets?
I think to the extent it is, and it's somewhat of an indirect way, right? Because, as you know, when the PBOC injects liquidity into the Chinese banking system, that's where it will be. And I think the Chinese banks either put that money into Chinese bonds or in deposits, or they sometimes have to buy dollars, right, on behalf of the PBOC. But as you know, that the yuan has been strengthening sort of since, I think, mid-November or so, and the euro has been strengthening too. So I think it comes through the weakness of the dollar, and that weakness of the dollar is obviously affecting commodity prices and also stock prices and emerging markets. So it's a bit that, I think, indirect effect. I guess is that the yuan is strengthening on this idea that if this liquidity injection, which by the way is quite substantial now, it's 3.5 trillion yuan, $500 billion of dollars, if that does start to have some sort of positive effect on the Chinese economy, that the strength of the yuan, is being carried over to the weakness of the dollar, and sort of that indirect effect on global assets. Yeah.
Yeah, no, I didn't mean to cut you off. I mean, I think it's an interesting thought because, China's exports, South Korean exports, if they stay strong, will send one kind of message. And if the yuan stays strong, it could actually help the consumer in China to a certain degree. So I wonder whether or not, do you think there's much likelihood that we could get mean reversion next year, that maybe U.S. and European assets move sideways and we get some rallies in Chinese and Hong Kong stocks? They've been moribund.
Yeah, they've been very moribund, and I think that sort of idea of what we're seeing in small caps in the US, like this catch-up idea, because that's been the lagging sectors, right? And against that you get some sort of similar effect internationally. Chinese stocks and Hong Kong stocks have really lagged this year. They're one of the few markets that actually are down with quite substantial amounts. So if this yuan strength is a signal of, as you mentioned, the export sector is improving, industrial profits overnight were improving. Yeah, then the Chinese stocks have some scope to rally.
Yeah, I think that would make a lot of people happy. Anyway, thanks, Ben. Ben Emmon, Senior Portfolio Manager, Head of Fixed Income at New Edge Wealth. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts. You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis. Join us again tomorrow for all the news you need to start your day, right here on Bloomberg Daybreak Asia.